All right, guys. So we're gonna go over the trade that I took on Friday. I know I look a little bit rough right now, but who gives a fuck? We waking up, we grinding, we get into it. So without further ado, let's get into this trade. So this is a simple 1 hour liquidity support break and retest trade, right? And these are all of my reasonings why. So first off, let's just rewind real quick to about the point that I got in. Okay, cool. First thing that we see, we are below London lows, right? London lows are right here. We break below London lows on the 5 minute, and then we come right back up with a Harami pattern, a bullish Harami pattern. So that's telling me that this is showing some type of reversal power, right? After we come out of here with this Harami pattern, we get a good 5 minute closure outside of the zone. So at this point, the only thing that I'm waiting on is for price to come back and retest this level and give us some type of entry signal. So what this move was a liquidity sweep on London lows, right? So I love when I see liquidity sweeps. And if we go to the 15 minute, don't pay attention to how everything is mumbled and jumbled up right now, but we can see this strong wick right here confirming that this was a liquidity grab. So all of that did was give me indication that we were reversing bullish, right? Once we closed outside of the zone, at this point, the only thing that I was waiting on was a retest at this level. We got a retest at this level right here, and we see that it's not necessarily rejection wicks, but we see the bullish candles don't really want to close inside of the zone, especially with this doji right here. So right here at this point is our internal break of structure, our pivot point that I want to see price rise above or break. And we also have this fair value gap above as well. So I was being cautious just in case we respected this bearish fair value gap and kept down. I wanted to make sure that we got an inversion on that on top of the break of structure to the internal, right? So once we inverse, I mean, it happened live, so it's kind of hard to explain, but those are all the things that made me want to get in that trade. We also had London's high liquidity above, and then we still have a 5 minute resistance area to tap or supply, however you want to label it. So these are all the reasons that made me want to get into this trade. The most important thing, to be honest, is just this bullish liquidity grab with the Harami pattern. We got the internal breaking structure with the inversion on bearish fair value gap. This was just a beautiful setup for me. My edge was available, so I took it and it played out. $1,100 trade. That was a beautiful setup. So now we're gonna go over the last trade that I took on Friday on my first day with the funded account. So we look at the 5 minute really quickly. I did take this setup on a 1 minute entry, but I had confluences backed up from the 5 minute. So what we can see is before market open, we have multiple rejections at this trading zone with no serious closures inside of this zone, right? We come back and we revisit this area at 10:20, 10:30-ish. What happens? We get a strong rejection wick at this level, right? And we also are forming a bearish Harami pattern. So I'm like, okay, cool. We could possibly get a quick scalp out of this area. So why did I take this trade on a 1 minute instead of taking a 5 minute break of candle? I was already up like 1K on my account, and I didn't want to have too much at risk. And if I would have got in on this 5 minute setup, I would have had to have a 30, like roughly around a 30 pip stop loss, right? If I would have did it right here, like 25 pip stop loss. And I didn't want to risk that much, especially with it being a demand sitting right here. So I know price is 9 times out of 10 gonna bounce back bullish out of this area. So what I did was go down to my 1 minute time frame so I could take advantage of this quick scalp. And now we can see I'm catching that 5 minute break of candle without risking so many points up there. So now instead of risking like 20 to 30 pips, I'm only risking 12 points or whatever you call it. I'm only risking 12, and I'm going to catch all of these fair value gaps in this demand. So we do have a bullish temperament, right? We do have a bullish trend going, as we can see right here. So I'm understanding that price 9 times out of 10 is going to bounce out of this demand area, but I do want to take advantage of this quick scalp. So why did I get in? We got a break of structure right here, a good little pivot point, and we also have 3 or 4 fair value gaps below to target, okay? So what do you know? We come down, we get that fair value gap, we get this fair value gap, we get this last fair value gap. We just barely graze our take profit, right? No drawdown whatsoever. We come back up to the 5 minute, and what do you know? What happens? We bounce right out of that demand area. So being 100% honest, it would have been smarter to just wait on the demand setup. But being that I had already caught this move to the upside, and I kind of understood the market temperament, I was like, I could take this quick scalp because I was just present, and I got I guess you could say, just a little bit of experience. But all in all, those were my 2 trades. Nothing too serious on this second one. Just a simple liquidity resistance with a break of candle, 1 minute setup. And yeah, man, we're going to show back up Monday. This is the boring part of trading. This is the irritating part, going back and reviewing everything. But this is what got me to where I am. So we're going to keep doing it. And we'll be back on Monday with either a fast forward clip or a trade breakdown like this. So yeah, happy trading.